Good morning, everyone, and welcome to the European crossover webinar. And we did go and have a data yesterday, or actually last night, overnight, here with the Aussie dollar. The employment number came in okay, but the determinant was actually on the employment rate, which really that's what the market was focused on. So you can see here that we came in. They're looking. 5.1 actually came in at 5.2, which suggests further rate cuts down the line. So that's actually what pushed the Aussie. You can see here across the pairs. Move this all the way. The Aussie took quite a dip. Now we're trying to hold in here. The only difference is in the last time we had a more significant, that was on the RBA rate cut. We actually saw the market coming back. And we haven't seen that much of this here. We've lost here the 69.44. The market's just trying to hang on. We did come into some, there is a little bit of, came right here, just about tagged this right area here. Comes in right there at 68.98. We're trying to hold just above that. When we look also at the Euro Aussie, that came into a key critical daily area, which is 63.41, which is where it's at right now. Now, I did try and pop up a little bit higher, but we can go in and quickly take a look at that. Right here with the Euro Aussie, and boy, did we make a pretty good run here. I know people have been trying to step in front of this, and we had counseled against this from this weekend. Now, that was this weekend, and the Asian analysis and advising that the market had defended the 1695 as well as the exponential moving average has been supportive, and we certainly broke higher. We've continued to move higher. Now we do have a key daily resistance level here at 63.41. We can try and pull this back. You see that right here? Very, very key level here at 63.41. Very, very big level here coming across. So it'll be interesting to see if they can, if they can advance beyond that. But this, I believe, will be an area for pause. Like I said, it's a daily close, Larry, so we have to find out how we close on that. But we certainly did push higher. And like I said, for those that were short, really this opens the door for really, you think about this, for a much higher price potentially. Now the euro is a little bit struggling its own self. That's euro versus the dollar, but we may see a little bit of a pause here. We've already had this run up here, then a little bit more. May see this ease back from this area, but we shall see. Also saw the Aussie yen weaken. We talked about that. If we come in here to the Aussie yen. Right here, we've been looking potentially for this move down to 74.73, and that's exactly where it just went to and found a little bit of support in here. Posted some charts in the Asian session advising that the death march continues, and really it doesn't stop it from the 74.73. And I think the low here was 74.77. But we were talking about how this market wasn't really doing anything. We thought we could rotate lower, potentially even make it down here. But first pause will be 74.73. And so far, we just about got there, off by about 4 pips. Coming in today, we do have industrial production for EU coming in at the top of the hour coming up. And let's see. Coming into the States, import-export prices, as well as jobless claims. And Canadian data is going to be at 8:30 Eastern, the housing price index. So it's going to be import and export prices, as well as jobless claims and housing prices. And that'll be it until we roll into the evening, where we'll see some manufacturing data come out here for Kiwi. So let's take a look at the news. The UK Conservative lawmakers begin voting today in the contest to replace Prime Minister Theresa May. Under the rules, any candidate with 16 votes or fewer in the first round will be eliminated. If all candidates have more than 16 votes, the person with the fewest votes must bow out. The process is then repeated until the field is whittled down to two frontrunners who then go head-to-head in a vote of the party membership. Results of today's first round are due at around 12 GMT. Switzerland has slightly raised its 2019 economic growth forecast to 1.2%, but warns of the risk to the global economy, including the trade dispute between the U.S. and China and the uncertainty over Brexit. Tensions are growing around Cyprus and offshore gas field developed southeast of the divided island. And moving on to this markets, global stock markets stayed under a cloud on Thursday, with Hong Kong's Hang Seng Index dropping for a second day as tensions surrounding this week's street protests simmered and oil prices rebounded, with growing doubts about any improvement of what President Trump called testy trade relations between the Washington and Beijing before this month's G20 summit, and some market anxiety that the Federal Reserve's easing speculation may have been overdone. Stocks ticked lower across the world. Wall Street indices ended in the red again overnight as the U.S. inflation numbers for May provided no obstacle to Fed rate cuts over the month ahead. Also encouraging, the Fed easing hopes had been a sliding global energy process early this week, but Brent crude futures more than reversed Wednesday's drop and jump up to 4%. First thing on Thursday after reports of an attack on oil tankers in the Gulf of Oman. 10-year Treasury yields were lower despite a lukewarm auction late Wednesday, with the 3-month to 10-year yield curve staying inverted at more than 10 basis points. The dollar index was lower after strengthening on Wednesday, with euro dollar regaining some ground. Some traders said the euro was hurt after Trump said he considered sanctions over Russia's Nord Stream 2 natural gas pipeline and warned Germany against depending on Russia for energy. Long-dated Japanese government yields fell to their lowest since 2016 before next week's BOJ meeting, with Italy debt yields backing up after surprised on Wednesday by selling a syndicated 20-year sovereign bond. And you can see here Eurozone April industrial production coming up. With that, we'll go on and move into the analysis. So here's our support, and that's what we've been looking at, is 1272. The euro did take a dip. We talked about this. Let's see here. A little bit later in the day, as we started to slide, I thought we may be able to pare back. Well, we had actually slid into the 1292. I said we'd see some additional pressure as late bulls probably would be tested, and we did. We got down here 1283. I thought we might come down here to the, I think is a very good area, this 1272. So I think there's a potential that we can still dip down here. I think that's going to be a very good buying area for the euro, but there's still that potential. Also the potential for the cash dollar index to come up here and test that 97.11, really between 11 and 97.20. So for the bias chart resistance, that's going to remain the same here at 1272. Take a look at the euro on the daily basis. So I like that 1272 area coming in. You know, potentially this is really a strong area. This 1262. Um, we can break here, and 1262 is key here. If we were to, if the market, like I said, if the cash dollar index makes that move up to between 97.11 to 97.20, you could see this potentially press into this 1262, and that would be a very, very good area here for the euro. I don't think it's going to fall back down. It can if we see the dollar index press, but I think that 1272 really offers a pretty decent area here if you want to put it 1269. But we'll go with this 1272 for now. I think the euro, as I mentioned, is going to be is a buy. I think we'll eventually move higher. We came under a little bit of you know. Pressure, I should say. I thought we might be able to break up here and hit some stops, but we do have those options. Maybe things will turn around once we get past these options and allow the euro to work higher. We shall see. Um, but we're going to go with that 1272. On the resistance side, it's going to be right here. Looks like right there, 1326. Take a look on the 2-hour. They're still struggling with that. We'll call it 13. Stick with our 1324 level. That's what resistance is for right now. So he runs back up. Actually the resistance comes in a little bit higher than that. If you want to push in here, really is right here at 1335. They'll run into some push here, but it's 1335 they've had some trouble with. So I'll call it 1334. It's when you get past 1334, then the market can start pushing those stops. Let's go move into the cable. Well, we talked about how this has been pressing up against this area here, and we're saying essentially in the analysis we're being consolidating, and it certainly looked like it was open to push higher, but we've relented and kind of gone back to the slide again. Actually, yesterday when the cash dollar index was under some pressure, it looked like we could push even higher here. Basically, really, if the dollar index fell, it would allow this, but the weight of the overall negative tone with cable certainly pushed itself lower here. Looking back here, then this resistance coming here. Continues to remain in place right here. We've seen that 2744, and we'll keep that. No need to change that. Well, we had the 2800, but I mean, this is the consolidation area, which is struggling. I thought it might be able to pray, and if it did, hey, we have blue skies ahead up to 2800, but we'll adjust that to where it's reacting to. With support, and let's take a look at this. Oh, it's just below right there. 2654, 2654. If we do, let's see if we see that dollar add on. This is what we'd be looking to. Call it 2653. Moving in here now to the Aussie dollar. right there. It's 68.98. And let's take a look for resistance. For right now is going to be right there. 69.52. Let's go and move into the Kiwi. This is continuing to remain under pressure and had our support here at 65.48. And that's going to remain the same here, 65.48. Resistance will be right here at 66.12. Let's go move into the dollar CAD. We saw the dollar CAD making a move yesterday. I did go on and post that we had that resistance coming in at 33.29, and we had that put on here a little bit of a supply zone on up to 33. Probably sounded a little bit too tight, but I put in here. Here was our resistance to come in here at 33.28, 29. Actually, right here, 33.29. I said there's the beginning of a supply zone between there and 33.48. The market topped out right here. It's 33.45. Okay, and since we've seen this market pull back since then, okay. We'll just go with this resistance right here at 33.42. 33.42. Well, we're looking for a break lower, but we're going to go with initial support on this way down. If you took those trades up in here, the 29 and even a little bit higher, we talked about that supply zone between 33.29 to 33.48. Obviously, we're lower on both those. It's going to be 33. It's going to be 32.83. 32.83. If you're looking for area to lay part of that off, although we are looking for much lower prices. The peso continues to languish here. Now we've had that support down here at 1906. I'm not going to change anything. We can quickly drop back down there and tag this area before trying to, settle itself. So I think that there's still one more drop. So, and really there's nothing happening here with the peso now. We're kind of dancing around here, but really nothing. I think we're still buffeted between that and the 1923.6. So I don't see any reason to go in and change that after the volatility that we had. So this is just going to remain the same here. And moving in here to the dollar yen. We had that resistance here. We kept it at 876, and we had our support down here. I believe we had it from yesterday at 805. Yeah, 805. And actually, after putting it at 876, we actually dropped this down to 853. That's correct. So let's take a look here on the 2-hour chart. Overall, we haven't had that much movement from yesterday in a lot of these pairs. I mean, we've seen the euro kind of slide back, but we had the 876. The market ran out of gas at what, 880, and then we slid back, and then we moved it down to 853, and high back has been 855. So we're trapped in pretty tight range. We're going to stay with this 853 for our resistance, and our support is going to still stay the same. We're going to stay with the 805. So once again, no changes here. So the euro's going to, the dollar yen is going to stay the same at 805 with 853 support and resistance. Moving on to the cash dollar index, we're looking here. This has been a concern. We talked about that. Was it? We had come down to that on Friday, down here to this 96.51 confluence with the 38%, and we had not been able to get much of a foothold on here, and we risked the opportunity of this just turning around and rolling back. And we really need to see 97.11 today. And the market's really struggling. It's not just getting, there's just not much foot traction or not much traction in here. The resistance is still going to remain the same. When we look here on the 2-hour chart, we've got it right here at 97.11. And really got this band between 11 to 21. It's in this zone here. If we do jump up, I think we would trigger and go past that. Not much. We'll just move that here to, we're actually going to move it, allow for them to, in case they do hit some stops. We'll just cut right there, 97.15. That'll be our resistance. We'll just move that up a little bit higher. And I think those will be good opportunities to go and sell against. Looking for support. Initially, support will come in right there at 96.70, 96.70. But once again, I still think there's the opportunity for this to break lower, but that's just going to be just for today. But we don't grab a foothold above 97, this market can quickly start sliding. And like I said, that's just going to be a yield sign on the way lower. So really, the dollar index really does risk the potential to really start to break and then head the week lower into the close. So be wary of that. We're going to move into the cross rates now. And let's get here with the Kiwi yen. Now, we talked about this market is continuing to slide. As it has continued to dip. It's faring a little bit better than the Aussie, although the data was Aussie related on the employment. But this market continues to go on and stay lower. A moment. So we were looking for potentially a move to 71.12. And actually, that's where we went to. We went to 71.11 right here. So we had 71.12, the low 71.11. We're going to go and keep that here and see if we can hang on. So there was we just, well, actually, it was 71.11.7. So essentially, it hit that to the pip. Let's go and take a look here on the 2-hour chart. Yeah, the low was 71.11.3, so off essentially half a pip. We're going to look for this area to hold for now. And resistance is going to come in right there for 71. I got 45 here. 11 did go just a bit above it, so we'll say 71.49. Yeah, just one moment. Next up is going to be Euro Yen. Trying to hold our own just a little bit here in this Euro Yen after a bit of a pair back. For the support that we had from yesterday here on the Euro Yen was coming in at 22.56. We did get down here bully all the way to 22.17 as these pair strengthened, and also the Euro paired back. Looking here on the Euro Yen, very key that it holds this area right here. You see that coming right there? 22, right there, 22.23. It got as low as what, 22.18. So 22.23. We're going to go with this 22.23 for support for the day. Important that it holds that. We have been as low as 22.17. And let's take a look on the upside. Upside is going to be right here at 22.59, 22.60. as the euro had paired back. We have, when you take a look at this, let's go on. One of the things that we did see here, and we use the exponential moving averages, I do, on the 30-minute. If you see here, it's been on a sell signal. It's been riding that. We're trying to press up, so see if they can work a little bit higher. I think the euro can finish the week a little pushing higher itself. We'll see how we do, but once again, I use the exponential moving averages based on the 30-minute, and we generated that sell signal. Well, the market was fluctuating, but once we started to break lower from, well, I guess, around the 22.75, really the door was open for the momentum to go in and continue to push lower here. Let's go and move into the Euro Aussie. We did get the Australian data out. This is a very big level here. We talked about that. The 63.41 area here. There, 63.41 coming across. That's going to be very key for the daily. We talked about this, or in the Asian analysis at the beginning of the week, and you can see here that this suggests that we can really push much higher. But this is a key area here. Let's go in and there we go. Very key whether we can go in and close above that. Obviously, if we close, we're just going to keep on continue to push higher. But a very key area here at 63.41. If the market is going to take a little bit of a breather, and we may not necessarily do that, you can see we can just keep on pushing higher. I know people have been short on this. This is a good little area here, but we shall see. For right now, we're going to go with this 63.41. We're above it right now, and the market had gotten as high as 63, looks like 63.64, but we'll go with this 63.41, the importance of this daily, and we're going to go in and mark that off with the asterisks. Show the importance of this daily for a daily close. And when we're looking at support, it's going to be 62.93. Now there's some right here. The market may bounce around here at 63.11. So on a very short-term basis, we can say 63.10 if you're scalping around. But if we do start to pair back, if we do, the real support really comes in right there at 62.93 on a short-term basis. Let's go into the Euro New Zealand. Well, you can see here they're struggling with the 72.21 here. And we've had this as a very key area from before. And we had talked about this when this market, when the euro was struggling and we weren't even able to go, and I'm talking about the euro versus the dollar. And I said, there's a lot better opportunities if you're negative here. And we kept on holding. We kept holding here, and certainly we did. And now we've turned things around and starting to move higher. And we've come up here to 72.21. That's key. That's going to be a key level. So it's going to be 72.21. Once again, maybe an area of pause. We'd move it as high as 72.50. Obviously, with the euro weakening yesterday, certainly has allowed for this market to ease back a bit. Taking a look here for support. We've already come down in here into the 7160. And that is support. We're going to go with that, with the 7160, which we already had. We had 7161. We're going to just keep that for support here. And it did go in and defend that 7160 here. So next up is going to be the Aussie yen. With the exception of these Aussie pairs, it's been a relatively quiet session overall. I thought once we got past CPI that we'd actually get a definitive movement, and that was not the case. Although we did see the euro eventually going to weaken. Well, we've talked about this. We've come down here into the 74, 73. We put it here when I posted the chart in the Asian session, and basically a death march to 74, 73. But 74.47 is the 61%. If the market's going to slide back, this is where we're going to try and find some support. We did here, right here, on the 74.73. The low has actually been 74.77. But there's some support, additional support just beyond this. If the Aussie can hold, this is where it's going to want to go to, the 74.47. Let's just adjust this down to reflect how weak that is. 74.73, we essentially hit it off by about 4 pips, but we have to go and adjust this for lower. And let's take a look for the resistance. Obviously some resistance here. We'll go right here, especially since it's been under pressure. Don't expect a lot from it. It's going to be 75.23. 75.23. And moving into the guppy, I mean, it tried, but it just has not been able to push. Look like we might be able to get past this 38 area here, but we've turned around and started sliding right back down again. We already come down here to the 61%. Support will come in here at 37.08. And resistance is going to come in right there. It's 37.70. 37.70. And let's go with the sterling odd. We had this 83.70, but certainly obviously with the weakness in the odd, we had the potential to go move higher, and that's going to come in right here, 84.10. Came right down here to tag that. And that's going to be 82.85. 82.85. As I mentioned, we do have data up at the top of the hour, industrial production. They're looking, Reuters poll is going to be a negative half percent here, half of a percent. Let's go on and move into the main screen. So just a real quick recap on this, and we'll pull up the bias chart. We're looking for the euro to come down here. Not looking for, but a very good area here is 12.72. We're going to go in and keep that. I mean, one of the things that we looked at was, and we looked at the daily, very solid level at 12.62. If you look in the 2-hour, it comes in here potentially to 12.58. But this is a very good level here with the euro. I don't want to push it even further. I mean, there potentially we can even come down here 12.65 right here, 12.65. This would allow the market to spook and pull back down a little bit further. But let's see, you can make the case right there. If we break to new lows, 12.66. I like that 12.72 area here. Although that would only take out the lows here, and you'd probably gun those stops. Anyone that has the stops is probably going to get flushed out. So I guess so that we'll know what the risk level is. We'll move this down here to 12.66. But overall, I think that's a very, very good level here for the euro. We'll just go and adjust this since we had already gotten the I was thinking that potentially we could have seen that 1270s yesterday as we pushed lower. We did make a new low. I saw that we were at 1293. Say, hey, look, the late bulls are going to be under further pressure. They'll push them, and they did push them. They got all the way down here to 1283, so another 10 pips. But I thought they might spook them and go into the 70s. If they take this out, it is going to hit some stops. So we'll allow for it for 1266 on this down. The real key resistance comes in here at 1334. Once again, there's some resistance, that old key level of 1324. But the stops where they're going to get knocked about in case we do start pushing that, is really going to be at 1334. That's where that market would get to. Now, moving on to the cash dollar index, as I mentioned, this doesn't look good for the dollar. I mean, we've just not been able, I mean, the market made it all the way up to 97.01, and we just have not been able to get a foothold. Our resistance, we did go and move that resistance because we looked for 97.11, and really there's a nice little zone between 97.11 to 97.20. We'll split the difference and go with the 97.15, but I think those are going to be selling opportunities with the cash dollar index. Cable still remains under pressure after consolidating below this 27.44, and looking like it could push higher. And if it did, we potentially the market could get to 28.25. With a pause at 28 even. Well, we just turned around and rolled right back down the pole and reinitiated or reinstituted that negative tone here. Looking here with the dollar CAD, we saw a nice little bounce back. Our initial resistance, remember, was 33.08. The market hit that and took that out by actually 1 pip, and then paired back down here to 76, paired back down 30 pips. Made another run to almost at 08, fell back again, held its own. We made this run as we had some issues also with crude oil and inventories. We mentioned about 33.29, and then I posted, hey, look, 33.29 to 33.48 is a good little supply zone. And the market topped out at 45, and we've rolled right back down the hill. Potentially, like I said, if we do go on further, although we're looking for a bigger break, you're going to find some support is going to come in at 32.82 is if you want to go and take some off the table and you're trying to stretch it for all it's worth. There's a little bit more actually at 32.90. Aussie dollar continues to remain under pressure. Like I said, the unemployment rate suggests that there's more rates coming with the Aussie, which it has it under its own pressure. That's all that we have here for the European crossover. As I said, it's with the exception of the Aussie pairs, it's been a relatively quiet session, and I'll go and get this posted. Thanks for joining us here on the European crossover.